Hi, welcome to WealthMills Securities Weekly Market Wrap. It's always a joy for me to come before you to share about the market updates. The bull rally in equity markets in India is continuing. Foreign portfolio investors every day they are buying to a tune of around 3,000 crores in India. In the month of December alone, foreign portfolio investors have invested nearly $5 billion in India. Whereas, as usual, the domestic institutional investors, they have been the continuous net sellers every day. This is what happening with respect to the broader indices in India is concerned. Of course, Nifty and Sensex, they are trading at all-time high levels. If the foreign portfolio investors, if they are going to be continuing their investing activity next few days, because historically, if you observe the data that comes from foreign portfolio investors in the month of December, December is considered to be one of the lowest trading volume month. Especially last 2 weeks of December, the volumes from foreign portfolio investors, they tend to come down because of the year-end holidays and the Christmas holidays. So that's why the activity that comes from foreign portfolio investors, they tend to be low. But this year is a different year because of the COVID-19 and travel restrictions and lockdowns. We are not sure whether the foreign portfolio investors, they are going to be on a holiday or they are going to continue their investing activity is the big question. But on the sidelines, there are funds which are sitting on cash to invest in India. And also, if you observe the data, last 45 days, the domestic institutional investors, they are sitting on pile of cash again. So, they have to deploy this cash in these markets when the debt instrument yields are at zero and also the treasury yields are at zero throughout the world. It is a sin to sit on cash, because if you are on cash means you are devaluing your money. So fund managers and the money managers, they tend to invest in equities irrespective of valuations. So there is a gush of liquidity that is coming into equity markets around the globe. What we are going to see is, if a fund manager is sitting on cash, his fund is going to underperform. So they are not in a mood to sit on cash at this moment. So at some point of time, they are forced to invest in markets to prop up their NAVs. That's what going to happen in markets. If you are waiting for a fall in the market, expect the unexpected in stock markets. That is the norm in the current markets. In the month of March, everybody thinking that during these crises, market going to go down all-time lows. Of course, indeed, it went into all-time lows, but nobody expected such a speedy, massive, ballistic recovery in the markets. And now, people have been waiting for market going to crash, But the foreign portfolio investors fueling the market, they are adding the fuel to the market and market is flying. How many days? It's a big question. But if again at the same point of time, the domestic institutional investors, they are sitting on cash. For example, if you are an investor, if you are sitting on cash in your bank, what you are going to do? Are you going to go and rush invest in debt instrument, or you are going to invest in a company where the valuations are compelling, or you are going to deploy your money in equity market at this point of time? Historically, the markets can give on a 3 years horizon, the market can give around 10 to 15% average returns irrespective of the market cycle. So the money has been coming into equity markets at this point of time. That is the key reason. Even though at the higher levels of the market is keep on trying to break the higher levels. That's why we can see this incredible bull rally in the markets. So expect the unexpected. If you are expecting the market to come down, expect vice versa. If you are expecting the market to go up, expect vice versa. That's how the equity markets always behaves, it is beyond the human comprehension, and expect the unexpected from equity market. I will tell you one example. The Spanish yield, the 10-year yield of Spanish bond is after 200 years, it is currently yielding a zero negative return. It is almost all giving a zero return currently. So you can understand the liquidity that is flushing into the market. If you are in Spain, you can't keep your money in bonds. You have to invest in an instrument where it can give higher yield than the inflation. Always equity investment, proven that the company earnings will upbeat the inflation. It might correct because of the froth in the stocks with the valuation gap in the stocks, but on a longer term basis, if you see always equity instruments, the earnings of the companies gives greater returns when we compare with the inflation curve. So right now is the time, if you are a investor risk averse, if you are an investor who is don't want to invest in equity markets, this is the time to invest in equity markets. And what is the strategy? One, we keep on gets calls from our investors. What is the strategy? Most people have been waiting for a fall in the market for past 6 months, and markets are went up from the low of March. Nearly it went up by 70%. They missed the a fabulous rally in the markets. So try to, at this point of time, don't look at the index. Have a stock specific approach. There are many stocks still are trading at historical low valuations, especially in the space of mid and small cap stocks. There are many stocks which are way below. They might have risen 100% from the March lows, but they are way below the 52-week highs, and they are way below the previous lifetime highs. And also, as the economy is coming back on its track, Indian markets or Indian economy is expected to show positive GDP growth. It can be nearly the highest GDP growth in the world, touching around on an average 7 to 8% GDP growth in the next following years. It can be 2021 and 22 Indian markets, Indian economy can give a fabulous 7 to 8% growth it can give, because there is a pent up demand. If you go out, people are wearing masks and they are doing their economic activity. So it's more exaggerated. People thought the damage is minimal than expected. So that's why I always say expect the unexpected always in the markets and in the economy. So that's why we can see markets are in a bullish territory right now. I want to show one of the interesting data to you. Currently, as the lockdown restrictions are getting eased across the globe, the economic activity is coming back into the businesses, into the trade. We can see the commodity prices going up. It can be the crude and metals and the other basic raw materials are going up. The prices are going up. Crude from a low of, even in fact, if you remember in the month of April, crude touched a zero rate. The crude futures touched zero rate. From zero, the crude currently trading at $50 per barrel, which gives a very good positive to, which gives always, if the crude, normally in India, people tend to say we need to have a depressed crude prices. No, the depressed crude prices are not good to anyone. The moderate crude prices are good to the global economy. If the crude prices are between $50 to $60 in the near future, it will be good for Middle East, and as India, we receive a lot of internal remittances from the NRIs across the globe. This is one of the significant foreign exchange reserve for the Indian government, and also if the Middle East is doing well, that will be good for the global economy also. So when the commodity cycle is taking a uptrend, that also good for the manufacturing activity also, because the input cost can be passed on to the ultimate user. So it is one way positive. If high commodity cycle is always, because India is a greater consumption story and we are not a great production story, it will have some kind of negative impact, but it can be, this negative impact can be offset with the positivity in the whole global space. So we are in a sweet spot in India currently to invest in the market. Use every dip to invest in the quality companies. It can be mid and small cap companies. I can see greater value is there in the mid and small cap space than the large cap space. Of course, if you are a risk tolerant investor, you can invest in large cap stocks also at dips. So don't wait. You can't time the market. Decide your time in the market. That is the ultimate key differentiator between a successful investor and a seasonal investor. I know most people who tend to say we lost money in market, we lost money in market. They will come on the peak of the market cycle. Many investors with us also, they came to us and invested in the year 2018 Jan to March, where the valuations are historically high. As the investor is on cash, we need to invest the money. We can't time the market when the market will come down. So when the market comes down, the investor should be in a position to buy the same stock at the bottom levels also. So there is a discount sale that went on in the markets for a so long period of time in especially mid and small cap stocks. Those people who have the confidence in the theme, who have confidence in that stock, who have been accumulating this stock. Of course, you might say, I don't have money to further buy. If you don't have money to further buy, please don't come into equity market. Equity market is a place you need to buy at a bottom price also. Those are the people who will make money in stock market over a long term period of time. Most investors, what they tend to do is they come on the peak of the market cycle. Once the market goes down, they will frustrate and they will book losses and go out. Some people, they put a stop loss, which is no use in investing. Stop loss never make any difference to you. Ultimately, you lose your money, but you can't get anything out of equity market by keeping in a good quality stock a stop loss position. You can't enter again. If you are timing the market, that's good. You are a well informed investor, but in majority of the cases, timing the market is highly impossible. You can time the market 1-2 times, but not every market cycle. That's why you can see those people who tend to make money in markets are the long-term investors and also the people who will accumulate chips, who will accumulate the stocks at every dip in the market. These are the people who will see a multi-bagger kind of return in stock markets. If you want to have a multi-bagger kind of returns, you need to have this strategy in Indian markets. With respect to the stock specific action is concerned, I want to share one mid cap stock and the second one is one small cap stock. The first mid cap stock is Pyramid Enterprises. This stock we have been advocating our investors to buy from quite a long time. The company promoted by Ajay Pirabil in NBFC in pharmaceutical space, this promoter holds one of the highest percentage of the promoter holding. And also, the company have a natural hedge in this company, that is 50% of their revenues comes from pharmaceutical industry. At 1450 levels, the stock valuations looks very attractive. As the economy tend to get into a positive territory, the financial services and also the pharma story is going to play well. Right now, there is no institutional activity that's happening in this company. That's why the stock have not performed well in the past, I can say last 4 or 5 months. It's not performed anywhere. It is just hovering around this level. This is the time one investor can accumulate this stock for a longer term. The company is bidding for the DHFL assets. That gives a quick booster if the company could be able to successful in bidding. It is a very high value acquisition, but Pyramidal Enterprises, the financial services arm, will become greater strong in the days to come. And also just understand, in a positive territory, if the economy is in a positive territory, if the GDP is in a positive territory, the financial services stocks, they tend to do well in the coming days. And the other stock I want to share is a small cap stock. We have been advocating our investors to buy this stock, Bharat Seeds, which is a subsidiary of Maruti Suzuki. And in this company, Suzuki Motors and Maruti combinedly owns around 30% in this company. And also it is Ranay Group. The promoter also recently buying in the open market, and also the promoter holds around 70% in this company. The stock valuations looks very compelling. You can go and watch for details our previous videos about Bharat Seeds. It is a good level to take a position at these levels. So this is all with me this week. I wish you all a holiday season and season greetings. Thank you.